Welcome back. Let's check crypto this morning. Take a look. Mixed story with Bitcoin now at 89,666. Bitcoin, of course, on a wild ride this year with a massive decline in prices earlier this month. Stablecoin issuer Circle has been leading the charge in crypto payment and technology systems after debuting on the New York Stock Exchange in June of this year. The stock is down from its highs, but back to roughly where it opened on that IPO day at $31 a share. Circle posted better than expected third quarter earnings, meanwhile, reporting more than $739 million in revenue. Joining me now with a status check is the CEO of Circle, Jeremy Allaire. Jeremy, great to see you. Welcome.
Thank you, Maria. Great to be here.
What's your take on this volatility for digital assets, in particular Bitcoin, et cetera, over the last 3 or 4 months or so? What do you think was behind it, and how do you see that volatility impacting Circle?
Yeah, two things. I think first, on the volatility side, things like Bitcoin have always been, more volatile. That has been less so in the recent periods, although from time to time, you have a lot of leverage, and when you have a major market move, maybe triggered by a global macro event, that leverage can pretty negatively impact some of the participants in the market, and then I think that kind of chases away some of the participants. Fundamentally, crypto assets, key blockchain infrastructure, the backdrop of all of this is the strongest it's ever been. And then, I think specifically with Circle, for us, we operate USDC and a family of technology services that help major financial institutions, payment companies, and others build on this infrastructure to modernize the way the global financial and economic system works. And so we're less about trading, speculatively in a crypto asset, and much more about a general purpose, general architecture, digital currency money to power payments and finance in this new system going forward.
Well, I mean, certainly you've got massive change ahead. Circle, Ripple, and 3 other digital assets companies received conditional approval from the Office of Comptroller of the Currency for national trust bank charters. This is a major step toward cryptocurrency becoming a core part of the U.S. banking system. Jeremy, tell me how you see this playing out. Are you, in effect, competing with the traditional banks?
So we're really taking a different approach, and really for a very long time, we've talked about really wanting to take the model that we've developed with USDC, which is fully reserved money, where we're not lending money, we're holding on to it one for one, and then kind of have that be held as part of a national trust bank. And that's a goal that we had for a long time. And as noted, we've just received conditional approval for the chartering of a new bank, First National Digital Currency Bank. That is the bank we're chartering. And as we've discussed publicly since the announcement, this is really about continuing to strengthen the reserves and the security of the reserves so that whether it's a household or a business or another financial institution, if you're building on top of Circle's infrastructure, it has the greatest safeguards around it. And additionally, I think as there's this proliferation in things like digital tokens that represent other kinds of assets, our National Trust Bank could help hold on to those digital assets and safekeep them as well for others. And so we're not getting into lending. This is not a commercial bank. This is really to assist with the kind of core infrastructure that needs to protect this very powerful digital currency, USDC. And it also relates to the Genius Act, where under the Genius Act, Circle will need to be supervised by the OCC. And this charter obviously would establish that in advance of the Genius Act becoming effective law.
Yeah, no, I agree with all of that, but there was a reason that the major banks did not want you and others to try to encroach on their businesses in any way, even if you're not doing lending. And the question of competition always comes up from investors. I want you to tell us about that, because we've seen some companies launching their own stable coin, but at the same time, there are others choosing to partner with Circle in that regard on using the USDC as another payment. How would you assess the competitive landscape right now?
Yeah, it's very dynamic, Maria. A couple things I'd say. One is, post our IPO and the Genius Act, we've seen a really tremendous amount of engagement from financial firms, technology firms, commerce firms around the world, not just the U.S., but in jurisdictions around the world, who want to build on this infrastructure. And we're forming many partnerships, and we're very excited about that. Some of the leading brands in the world are choosing to partner with Circle. The second is that, in the core stablecoin network market where we do compete today, we've continued to strengthen and gain market share. We reported, as you noted, very strong results. We saw, year over year when we reported over 100% year-on-year growth in USDC. We saw 580% year-over-year growth in the amount of transactions happening with USDC. So we see strengthening of our competitive position and a widening of the types of firms and use cases all around the world that are going to use this technology. And then we're building major new infrastructures like ARC, which is in test mode, and some of the biggest financial institutions in the world, payments firms, tech firms, and others joining us in testing ARC as we prepare to launch that in 2026.
Yeah, and what kind of a growth story will that be? That was my next question in terms of the other revenue that the company is seeing because of fees from blockchain network partnerships. You've also added 5 new chains in the third quarter, 12 new chains year to date, and the launch of this ARC public test net. Tell us about that. What are you expecting from ARC in 2026, and how does that add to the growth story at Circle?
Yeah, the way we think about it is we're expanding from our core position in digital assets, issuing USDC and operating a network around it. And we're expanding by going deeper into the infrastructure that can power all economic and financial applications on the internet with ARC. So ARC is an economic OS for the internet. We had well over 100 major firms join us in the testing phase. And our view there is that over the next 5 to 10 years, virtually all economic activity, economic coordination, contracting, value exchange, governance, every aspect of running the economy is going to move into being mediated by software on the internet in increasing ways, also very much integrating with AI, powering that software. And we need to build operating systems that are purpose-built for that. So it's a huge opportunity, not just for Circle. We think it's a huge opportunity for all of these companies who can become stakeholders in what we're trying to do with ARC. And we see a tremendous opportunity for enterprise value, for revenue, and other things over the long term there.
Yeah.
We're not giving specific guidance there. And then the other is we're building Circle Payments Network, which is really an application that helps financial firms move money internationally more seamlessly using stablecoins like USDC.
Right, of course. And real quick before you go, the total stablecoin market right now, you say is $314 billion. You think it's going to go to $3 to $4 trillion by 2030?
Well, I haven't said specifically what I think it will go to. What I am happy to do is cite people like Secretary Bessent or other Wall Street analyst firms and third-party research who have a wide range of views, anywhere from a 25% CAGR to a 90% CAGR. What we've said is we're comfortable with a 40% CAGR in this space. But I think there is line of sight into the trillions over time.
That's amazing, Jeremy. Really great. All right, we will keep following the story, which keeps on growing. Thank you, Jeremy. We will see you soon.
Thank you.
And Merry Christmas
Happy
to
holidays.
you. Jeremy Allaire joining us. Jeremy Allaire. We'll be right back with a big hour right here. Stay with us.